Hello and welcome to Upstack America's Oracle EBS Financial Functional Training. My name is Bob and I'm the lead senior consultant for Upstack America. And today we are going to discuss the Procure-to-Pay Cycle. Now, businesses have two sets of processes, okay? There's the procure-to-pay process, which mostly deals with the expenses and purchasing side of the business. And also, there's the order-to-cash side of the business, which mostly deals with the revenue piece of the business. Okay. Now, in today's lesson, we are going to discuss the procure-to-pay process side of the business. Okay. Now, basically, what happens when you go to a project as an Oracle Financial Functional Consultant, you will be expected to know the business processes, okay? You'll be expected to know both the procure-to-pay process and you'll be expected to know the order-to-cash process, okay? Why do you have to know that? Because even though these processes are mostly done by the end users, meaning the people who are employed by the business, for example, accountants, data entry clerks, and people like those, even though those are the people who normally run these processes in the business, you will need to understand the process so that you can be able to give the best solution for the client as far as the implementation of the Oracle financial system is concerned. Okay? So I'll walk you through the whole process, all right, from the beginning all the way to the end. Okay? Now, basically what happens is this. When there is a need for an item, okay, or the need arises in a department within the business to buy or purchase something, what happens is within that department, someone would have to raise a requisition. Okay? Someone would have to raise a requisition. A requisition is basically an internal document that specifies what the department or the business want to procure from their vendors or their suppliers. Okay? I'll give you an example. Let's say, for example, in your department as an end user, you need office supplies. Okay, maybe you've ran out of your, the ink for the printers, and you need to, procure them. Okay, so what would happen is someone within the department would create a purchase requisition, which is basically an internal document, okay, that specifies what item needs to be procured from the suppliers or the vendors. Okay, now once this requisition is raised, it goes through some approval process within the department. Okay, that's normally how businesses work. Okay, now once this requisition is approved, the next thing normally what happens within the Oracle system or the Oracle ERP is to request for quotations. Okay, now mostly businesses deal with different suppliers. Okay, let's say for example, if I'm a company like Upstack America, we may have different suppliers that supply to us any office supplies. Okay, let's say for example, we may have Walmart, we may have Staples, we may have Office Depot. So we may have all those suppliers, and these suppliers might sell to us at different prices as far as whatever you are trying to procure is concerned. Okay, so what we'll do in the Oracle system, we will raise a request for quotation that we would send out to those suppliers that we deal with. Okay, we'll send out one RFQ to Walmart, another one to Staples, another one to Office Depot. Now, this is a document that requests the suppliers to provide to us the price of whatever we want to procure to them. Okay, in this case, the office supplies. Okay, So once we send out the RFQ, then the supplier will send us back the quotes, okay, or the quotation, the prices, okay. And what happens is within the department, once we receive the quotes, we'll choose which one is the best, okay. And in this case, of course, we'll go with the one that is cheaper, okay. Now, once now we choose the best quote, we analyze and choose the best quote, the next thing that happens is to actually create a purchase order, okay. A purchase order is basically a legal document that is raised that contains information about what we want to procure and is sent out to the supplier in order for the supplier to provide us with whatever we are trying to procure, okay. It will contain the price based on the quotations that we received, okay, and also it's gonna contain the quantity or the amount of the office supplies that we want to procure. In this case, in our example of office supplies, okay. So that purchase order is sent out to the supplier. All right. Now, what happens is when that supplier receives the purchase order, they would prepare the goods, they would ship them and send them to our office or our department. Okay. Now, within our department, we will receive those items. Okay. Now, all these processes, the creation of the requisitions, the creation of RFQs, the creation of the purchase orders, the actual receipt of the item, all those processes, these are done in the purchasing module within the Oracle EBS system. Okay, the purchase requisitions, the RFQs, the purchase orders or the POs, and the receipt of the item is done within the purchasing module. Okay, now what happens is once we receive the goods, then the same goods will be the supplier will have sent the goods with an invoice. Okay, mostly in businesses, companies pay for supplies or whatever items that they are procuring. They pay at a certain point in time. They may pay immediately or they might pay later on. Okay, now for every purchase, there's always an accompanied invoice, okay, for that business to pay, okay, requesting the business to pay, okay. So, and that invoice contains the payment terms, all right, when you've agreed that you're going to pay, the company is going to pay the supplier or the vendor. So, when the supplier sends the goods to the company, to us, okay, because we are the ones who are procuring the office supplies, they will send the goods together with an invoice, okay. So the goods will be received in the purchasing module, but the invoice will be entered in the payables module or the accounts payables AP module, okay. So that invoice will be entered in the AP module, okay, and then any payment related to that invoice would also be entered in the payables module, okay, depending on the payment terms. For example, if it's an immediate payment, then once the invoice is entered, the payment also will be made. We will cut a check and send that check to the supplier, okay, or we might do a wire transfer and send that transfer to the wire to the supplier's bank account, okay. Alternatively, there might be payment terms where maybe based on the agreements that we have with the supplier or the vendor, we might pay them within 30 days for that invoice, okay. So we'll enter the invoice, but we won't make the payment immediately. So we'll make the payment later, okay. That happens too, okay, within the procure-to-pay cycle. Now, Assuming now the payments have been made for the invoice, then there is a module called cash management module. That module deals mostly with reconciliation. Okay, so we'll be able to reconcile the payments that were done on our bank accounts. Okay, that module, the actual bank accounts that we have at the bank are connected to the module, and we'll be able to do the reconciliations for all the payments that we make. Okay, now when these transactions are entered into the system, okay, when the invoices are entered into the payables module, when the payments are entered into the payables module, when the reconciliation is done in the cash management module, the accounting entries are generated at the end of the month. Okay, at the end of, remember, in every module within the Oracle EBS suite, transactions that happen to those modules, they are sent into the general ledger, because that's the module that deals with the financial reporting of the enterprise. Okay, so these transactions that will be entered here will be sent to the general ledger for financial reporting. Okay, so and they are sent to the general ledger as journal entries. Okay, the transactions, for example, the invoice entry transaction or the payment or the reconciliation would be sent, those journal entries, those transactions would be sent to the general ledger as journal entries. Okay, also, sometimes, let's say, for example, if we are procuring items that are capital in nature. Let's say, for example, in this case, you are not really buying office supplies only. We also wanted to buy a vehicle for the business, okay, to use for the business in the department. All right. So because a vehicle is an asset, okay, a vehicle is an asset, it's a capital item, that invoice will not be sent directly to the general ledger from accounts payables module. Okay, the Oracle system has a way of finding out that that invoice is actually an invoice that is related to an asset, and it would send that invoice into the fixed assets module. Okay, remember the Oracle EBS suite, it's connected between the different modules. Okay, and a client might implement the purchasing module, they might implement the accounts payables module, receivables module, cash management module, and fixed assets module, and the general ledger module. So all these different modules, they are interconnected. They all talk to each other, and they all send entries into the general ledger. Okay, so the capital item, in this case, the vehicle transaction of the vehicle, that invoice would be sent first to the fixed assets module. Okay, and then now once it goes to the fixed assets module, it will be capitalized into an asset within the fixed assets module, and then that transaction would be sent to the general ledger. Okay, so the capital item would be sent to the fixed assets module. There is a way of doing that. As part of this training, you're gonna learn how entries move from asset invoices move, asset invoice transactions move from the payables module into the fixed assets module. Okay, and there's a program that you run, it's called the Create Mass Additions program. That program will pick up all the invoices that are tagged as assets, and it will send the invoices into the fixed assets module. Okay, and now once these invoices have been capitalized in the fixed assets module, those entries now are finally sent to the general ledger. Okay, now having said that, you will need to understand the various journal entries that are generated in this procure-to-pay cycle process. Okay, we need to understand the journal entries for all these transactions. Okay, all these transactions that are created in the Oracle e-business suite. We need to understand we need to know what journal entries are for each and every transaction. Now, as far as the requisitions are concerned, there's really no journal entry that is created. Okay, there's no journal entry that is created when you create a purchase requisition. Similarly, there is no journal entry that is created when you request a quotation. Okay, there's no journal entry that is created when an RFQ is raised. Okay. Now, there's also no journal entry that is created when a purchase order is created. There's no journal entry that is created when a purchase order is created. All right. Now, there's a journal entry that is created when you receive an item within the department and you enter that receipt within the purchasing module. And that journal entry is a debit to the receiving inventory and a credit to the item expense. Whatever item you're trying to procure, that there will be a credit entry for that item. All right. Now, as far as the invoicing of the AP in the AP module is concerned, if, for example, if it's an item expense, all right, if it's an item expense, the entry will be a debit to the item expense and then a credit to the payables liability, meaning we are recognizing that we have an obligation to pay for that item that we bought or we procured from the supplier. All right, that's what this entry means. Okay, if that item was an asset item, okay, we said we can, when we procure an asset related item, we also have to enter that invoice as an invoice in the payables module. Okay, but somehow the system will know based on the setups. If you are part of this training, you will know how the setups are done for assets related items. Okay, and because these setups are interconnected between different modules, the system will be able to know that that invoice that has been entered in the payables module is a fixed asset or an asset type of invoice. Okay, now if that is the case, the journal entry will be a debit to the asset clearing instead of the item expense. Okay, and then the credit will be payables liability, just the same way as if it was an item expense. Okay, and you are basically recognizing that you have an obligation to pay your suppliers. Okay, now the other entry will be for the payment. Now, when you make a payment, whether it's immediate, whether it's after 30 days, whether it's after 60 days, depending on the payment terms, the entry will be a debit to the payables liability, meaning you are reducing whatever the liability that you had previously, and then there'll be a credit to the cash or bank clearing. Okay, there'll be a credit to the cash or bank clearing. Now, I must say that for this clearing entry to be there, the client has to be using the cash management module. If there's no cash management module, it will be basically a credit to cash or bank, meaning the money is moving out of your pocket or the business pocket, okay, or business bank account for the payment. That's why it's a credit. Okay, a clearing account is not a permanent account. Okay, please note that a clearing account is not a permanent account, and it will be offset after the reconciliation, when the reconciliation is done in the cash management module. So after the reconciliation, the accounting entry will be a debit to the cash or bank clearing, and then a credit to the cash or bank. Okay, so after the reconciliation, the entry will be a debit to cash or bank clearing, and then a credit to cash or bank. Now, at the end of all this process, the final journal entry, okay, after all these journal entries have been, entered, the system has debited, credited all these entries, would end up with a debit of, let's say, for example, if it was an item expense, a debit of item expense of, a debit of the item expense, and then a credit of cash. That's it, will be the end result. Meaning, we are recognizing that we have an item. Okay, we bought an item which is a debit, and we are recognizing that money actually came out of our cash pool or bank account, and we paid for that item. Okay, and that's why it's supposed to be a credit to the cash or bank account. Okay, so that's pretty much what I wanted to discuss today as far as the procure-to-pay process is concerned. It's a very straightforward process. You need to understand this process as an Oracle Financials Functional Consultant in order for you to be able to give the best solution out there for the client when you're doing their implementation as an Oracle Financials Functional Consultant. I'll see you in my next classes. Thank you so much. Goodbye.